Hello, this is Dave and welcome to Equity Story. I'm just having a look and I'm going to start with Aristocrat today. Normally we start with the markets because I've had a few people say, Dave, I know you're really nervous of the market and well really, and it's true, we haven't really put on much trends and over the last sort of 2.5 months. And a lot of people said, Dave, what are you doing putting out Aristocrat? Well, for us, it's really quite I mean, this is a stock we've trended quite a few times and obviously always done really well with it. But Aristocrat is the most, historically, the most, I think, bullish stock on the ASX 200. It'll certainly be in the top five in the last 2 years. And you can see back here, even from 2013, it's generally held a really bullish trend line, which is a 20-day moving average. Again, sometimes it's gone down a little bit further to that sort of 40-day, but jumped off it really, really quickly. You couldn't get a sort of a better looking trend. Why do we like it now? Again, it's had this similar price action. It's come down, it's sort of tested that sort of 40-day and bounced up, and it's hugging pretty nicely that sort of 20-day moving average. Starting to turn up on the MACD, holding the sort of levels that you'd expect a really bullish story to hold. And fundamentally, the general consensus is that this company is going to report in about 5-6 days, and those earnings reports could be pretty strong. So we just see this as really a classic trade, and we're very, very confident in the stock. So if we do get this fallback like we've been talking about, we feel if we're in something like Aristocrat, it's going to be, I think it'll rebound really quickly for us. And if it does go down, I don't think it's going to be hit nearly as bad as some of the other stocks, especially with obviously what we're hoping is going to be a decent earnings report coming out fairly soon. We like it, and again, like I said, you couldn't get a more bullish stock, and that's why we're happy to put this one on. And I think we're hoping we can really dive in and get a little bit of money. I feel a little bit like I said to a client, the client on the phone today, I said it's a little bit like there's a tsunami possibly coming, and I'm lying on the beach and I'm really hot, and I just want to have a quick dip in the sea before the tsunami comes and feel a bit better. And it does feel a little bit like that. So I'm just in the sea at the moment, and hoping obviously if this tsunami does come, I'm out of the water and most probably out with a decent profit before it does happen. But again, it is a great little trend, and I think it should do well for us anyway over time. What I just want to talk about tonight is the Dow, and again, it doesn't look exciting. Having this slight move, it's testing this 19,000 level. So it looks really great. It looks absolutely fantastic. It looks like we can have a really good trend here. But what I prefer to do with the Dow is really look at this in a longer term point of view, and not be a party pooper, not say, hey, yeah, this is great, but give you our reasoning why we just feel we've got to be a little bit cautious at the moment. This is a great big run up we've had now over the last 5-6 years, and that run up is largely due to these ridiculous monetary policy maybe we've had in the States, these low interest rates, which have really created this big bubble in, and that, as the future president of the United States says, has created this bubble in the share market. So how do we see this bubble? Do we think this bubble will burst and come? If you look at, again, as I said before, if you look at the Dow, here was in 1998, comes back 2002, tests those levels, does it again in 2009. Markets had this massive run up on low interest rates. Suddenly, we're not going to have low interest rates anymore. Okay, we're going to have a reduction in the corporate tax rate, which is fantastic. And again, there's obviously policies that Trump, there's going to be a lot more infrastructure building, and I think now that's why we're having this little bump up. But you can see why we're being cautious. There's this great run up, one of the longest run ups we've had for potentially, I think, ever, or the second one on the Dow, and we've got P ratios at pretty high rates now. Everything's pointing that this is really blowing up in a very high fashion, and we've got to have some sort of correction. What we do think is that yes, we're going to have this correction, but we don't think it'll be too bad, and I'll tell you the reasons why. We think we should have a correction. It might bubble up even a little bit higher than 19,000, and then I think we could at least have a correction back to that 16,500 level. And you can see over time how the market has Dow has a tendency to go back to that 200-day moving average, where it finds support and then moves on. And the question is that, well, if you think it's going to go down there, you sort of, why would you think why wouldn't you think it's going to go far further? And it could do, but I general feeling it'll be pretty short. And the reason being, there are a lot of catalysts in the world at the moment that I think can drive the share market higher in the sort of more medium term. And you just look in Italy now, you've got obviously huge bank failures. You've got people in Europe very, very, very worried about their savings, and I think as a result of this, you could potentially see a lot of money leaving Europe, and you are already. And the natural place for that money to obviously enter is the Dow. The other issue you've got at the moment is bonds, and I don't know if you understand exactly how bonds work, but you sort of buy a bond with a maturity date at 5-10 years, and a lot of these bonds have sort of 10-year maturity rates at some of them at sort of 2%, like the ones in the Dow, and some in Europe a lot lower. But suddenly, if you see the market interest rates going up, your bond becomes worth less and less because people can then buy obviously better bonds at higher interest rates. So there is a danger that could be, and there are a lot of people selling bonds, and this market is now starting to go into the stock market, and I think helping support this little bit of a movement maybe we're seeing here. But we are expecting this little pullback. So if we do, we're not panicking, because again, like I said, maybe a little bit by default, we can see there being a lot of support around this 200 if it does happen, and as soon as it turns, I think that could be our sort of signal, hopefully, for a pretty good year next year. It's very hard to try and predict the markets in the short term, but it's important, I think, that companies at least have a view on this. And I know a lot of brokers, they don't like to put their neck on the line, but I think you have to. We're in that business. We're looking at the charts, and we're trying to look at how charts have behaved in the past to give us an indication how they can behave in the future. You can even go back to, I think here you can see a little. People say that obviously, when charts often hit sort of levels 3,000, 4,000, 5,000, 19,000, they can go on. They can do, but here's a classic example in 1990, where again, you see we had that big fall, a little bit like you could argue like 1987, nice little bit. See it holding the 200 like it often does, then nice little run back up. Hey guys, we're right, and then suddenly we go. There you go, heading just over a higher level over 3,000. Get the little classic little exhaustion patterns, and bang, down she goes. Test that 200 again. So I think you've got to look in the past how charts have behaved, and I think if you do that, it does give us some sort of idea or clue and some sort of edge if we look at all the fundamentals in the world, what could happen. Just having a quick look at obviously what we're up to today. It's not all, some of it's good, it's not all brilliant, but BHP, we took a profit in. Yes, we do like BHP, but again, we just feel this market, we've just added Aristocrat recently, and we just added another trend. And like I said, we want to practice what we preach here, equity story. I want to have some cash if this market does pull back, and that's fine. We made a nice little profit on BHP. I'm happy with that. I'm happy to just for the moment to bag the cash and walk away. And again, with ORE, again, this stock is taking us on a real ride, which, as all stocks have moved recently, but it's taken us for a real ride. But the important thing, we've used these charts, used these support levels not to get shaken off. Again, the stock's come up. I still think it's got more in it, but again, we're happy. I think most of us have, a lot have made 5%, a lot have made a little bit more than 5%. I just think in this market, good to take a little bit of profit. And like I said, I prefer the ALL at the moment anyway. Just I'd like to also mention obviously Ramsay Healthcare. Again, why are we trending this? And arguably not a stock that's more bullish. Again, I'm just a little bit being cautious. If the tsunami comes, Ramsey's certainly a good stock if you're trending to be in. As Domino's again, it's starting to do quite well for us, starting to behave exactly as she should, and hopefully we'll have that decent move up sometime this week. Obviously, BAP is doing an ORE, holding this long-term trend line, and hopefully it behaves itself. And obviously, Evolution, Northern Star, we are trending those at the moment, but there is a technical reason we're trending these, because what it does, it gives us some really decent hedging on our portfolio. As the bear and the BBUS, why we haven't sold them, we want them. We want to hedge just in case we get the tsunami. We like them there. It gives us a nice little comforter, a little blanket that we can make some money on if the market goes down. One stock that is not behaving properly is FPH. Now, fundamentally, it reported really, really well. Funny enough, Deutsche Bank put it as a sell today because they didn't like the court case that got ResMed, but Citigroup put this stock as a buy today. So the market don't really know what to make of it. At the moment, we'll hold it, and I think the fact that it's on FY earnings now of 25, FY so P of 25, with the earnings growth they had, and it was a really tremendous report they had. I thought it was pretty decent. I think it's not. I'd like to think, never know. It's not going to do a focus on us, and hopefully it'll come back up pretty quickly. However, what I would say for those who like a little bit of a trade, there could be one thing I'd like to talk about is, Fisher and Paykel and obviously ResMed are they're the guns at the moment. Obviously the sleep apnea products. They've got these massive, really sort of bigger sort of, how do you say, products which they sell to the market. Now they're getting a lot of competition at the moment, and obviously companies like SomnoMed, which have these smaller devices like little mouth guards, are potentially in the future going to be affecting, could affect their revenue more so in maybe a year or 2 years from now. We are talking today and we just feel at the moment that Fisher & Paykel and ResMed need to continue their strong earnings growth, and really companies like SomnoMed is a classic takeover target. And I think if you're trending at the moment Fisher & Paykel, because obviously you like the story and like the earnings, but you have a little bit more of a higher risk tolerance for a small cap, and this is one of our 3-year growth stories, it wouldn't do you any harm to actually just maybe watch Fisher & Paykel the next few days. If it goes up a little bit, cut it and get into SomnoMed, because this company is trending actually very, very well at the moment. The downside is obviously it's got less volume, so it will be a little bit more volatile. But I think certainly SomnoMed, if you're not happy with Fisher & Paykel at the moment, just the way the stock is behaving on the market, and those sort of price actions worry you, then certainly have a look at SomnoMed, because this could be an excellent one to actually jump out of Fisher & Paykel and go into this stock. Just a little idea for you, and likewise, if you are interested in SomnoMed, have a good look at it, because I think this is a great growth story, and it's a classic takeover target. And I think certainly ResMed and Fisher & Paykel must be having a close look at this company at the moment. If they're not now, they will be in the next year or so, definitely. Just one little thing. Sorry, it's a long video tonight. I do apologize about that. Again, obviously, the growth, the stocks that we said look really strong this week, continue to look strong, and that's amazing. It's such a bullish market. There you go. They're the ones we said stay away from this week. They might look bearish, and that's incredible. CVO, GTY, MNL, VRL, all down today, and 2 of them hitting record lows on a bullish day. There you go. Equity story. What about that? Anyway, listen, have a good night, and I look forward to bringing you the report tomorrow night. Thank you. Good night.